$6.7 trillion. That is how much Americans spent using their debit or credit cards in 2019. More than 60% of those purchases were made using cards from Visa, a company that has long dominated the payment card industry.
Not only are the majority of all payment card transactions in the United States on Visa cards, but there's been lots of litigation over time, including from the Department of Justice. And the Department of Justice has had very clear legal decisions that show Visa has, quote, market power, which is the legal term, as a matter of law. So there's no doubt about this. Visa is dominant.
As payment cards become more essential in our daily lives, Visa has quickly grown to become one of the most valuable companies in America. As of October 2021, Visa was valued at over $480 billion and reported net revenue of $21.8 billion for 2020. Shares of the company have also seen an over 170% gain in the past 5 years.
A really good way to think about Visa's revenue stream is for every $100 spent on a Visa card anywhere in the world, they make about a quarter, meaning 25 cents, an actual quarter. Every time you buy a pair of shoes, that's $100, they get 25 cents of that. As the network has scaled, that's very high incremental margins, and so the profitability of the business naturally goes up.
But Visa's success hasn't always been great news for merchants who have no choice but to rely on them for payment.
If I could ask Visa for one thing, it would be for relief in the swipe fee arena. We are paying way too much. You're making way too much money off of us. And the lack of competition that you have with all of your issuing banks charging the same swipe fees across all markets across the country, it's really unfair. We don't do business that way. Other industries don't do business that way. So I don't know how you can get away with it.
So how exactly does Visa make money? And why does it dominate the payment card industry? The Bank of America launched Visa as the nation's first licensed credit card for middle-class consumers and small to medium-sized merchants in 1958.
The computer is changing our world, the way we do business.
By 1970, Bank of America gave up its direct control over the card, passing the control to a group of issuer banks that continued to manage, promote, and develop the new network in the United States. The company grew quickly after, expanding internationally by 1974 and introducing its first debit card in 1975.
Every month, British shoppers sign for £1.5 billion worth of goods on a credit card.
In 2007, Visa completed its corporate restructuring with the formation of Visa Inc. and went public in 2008, raising $17.9 billion in one of the largest U.S. public offerings to date.
Visa was set up to be dominant. They started actually as an association of thousands of banks across the country. So all these banks came together and established Visa to have this national credit card. But of course, they had a dominant position because it was virtually all the banks.
There are still Class B shares of Visa stock, which are actually owned still by those original banks.
Today, Visa has grown to become one of the world's largest payment processing networks, saying it has over 3.4 billion cards in the market across over 200 countries and territories. Visa generated over $4 trillion in purchase volume in the United States, according to the February 2021 Nielsen report. In comparison, MasterCard has over 2.3 billion cards in the market with a purchase volume of roughly 1.7 trillion.
Visa does have a huge number of cards out there, more than MasterCard without question. Discover Card's a little bit anomalous. They have more cards than they have transactions, but Visa cards in both credit and debit are the most frequent ones, and Visa dominates the transaction counts in both markets.
And it's a profitable business. Since going public, Visa has rarely had a decline in revenue, and its shares have continued to outperform the S&P 500, excluding just 3 years. And although the year isn't over yet, 2021 is on track to see Visa underperform the S&P 500. In one of those years, 2020, Visa still reported net revenue of $21.8 billion, with operating expenses at $7.8 billion. Its total net income for the fiscal year came to roughly $10.7 billion.
Their profit margins are huge. The numbers I've seen over time have been 30-40% profit margins, where, to give you a sense, in the retail industry, profit margins tend to be in the 2, 3, maybe 4% range.
So as a business, the reason it's so profitable is because it's a primarily fixed cost business. And once you've got that infrastructure all in place, each incremental transaction that's flowing through that ecosystem comes in at extremely high incremental margins because it's just this massive capacity network. And so as Visa has scaled, their profitability has gone up dramatically for that reason.